Now you see the problem number 10. Problem number 10, Dr. S. Talukadar. Dr. S. Talukadar is medical MBBS. He retired from the Department of Health. He retired from the Health Department on 31st December 2010. From 1/1/2011, he started private practice. Private practice means he started private hospital at his own residence. That hospital is his own residence with capital of 40,000. So you remember the capital of the doctor. Capital is 40,000. 40,000 is the capital. This capital goes to balance sheet. Okay. And next is own saving. Own saving rupees 20,000. Own saving. That capital is from own saving. And 20,000 by way of loan from his friend. Loan from friend at 12% interest. Interest on loan is 12%. So loan is liability goes to balance sheet. 12% interest on it. That is 20,000 into 12%. I think it is 2,400. 2,400 interest comes in the income and expenditure account. Okay. Per annum. He maintains books on cash basis. Accounts are maintained on cash basis. He extracted the cash account, showed the following. Okay. In the cash book, that is receipt and payment, these are the transactions. First receipt is capital. This goes to balance sheet. Second receipt is loan. This also goes to balance sheet liability side. Visiting fee is the income related to profession, goes to P&L account. Lecture fees are related to profession, goes to P&L account. Pension from the government is his personal income, not relating to profession. Not relating to profession. Okay. Goes to household. Then sale of prescription. Prescription means medicine. Sale of medicine is related to profession. It goes to professional account, that is P&L account or income and expenditure. Income from personal saving. Income from personal saving is not a professional, it is household. A receipt from certification and report. Receipt from certification report means it is profession. Doctor is to certify regarding the diseases and he is to give report on that disease, all that relating to profession. So it is a professional income. Prize from lottery. Prize from lottery is not a profession, it is personal. So out of these receipts, some are balance sheet items, some are connected with the profession and remaining are related with the household. Okay. Then come to the credit side. First is surgical instrument. Surgical instrument is a asset, goes to balance sheet. Second is motor car. Motor car is asset, goes to balance sheet. Purchase of medicine is a expense. Purchase of medicine is a expense, goes to professional account. Then motor car expense, it may be common. According to that, profession goes to profession, household goes to household. Miscellaneous expense. Miscellaneous expense may be profession or household. Salary, rent, these are the relating to mainly profession. If they are relating to household, you take household portion in the household, profession part in the profession. Okay. Household expense goes to household. This is purely related to household. Interest on loan. Interest on loan is profession because loan is taken for profession purpose from friend. So 2,400 is the interest and 20,000 is the loan. 12% rate. 20,000 loan, 12% rate, 2,400 interest. That total interest is taken here. Otherwise, if the loan interest paid is less, you have to make outstanding. Okay. Household furniture, it is the drawing. Household furniture is drawing. It is household asset. Household asset, it is drawing. Okay. Then festival expense. Festival expense related to household. Electricity charges may be household or profession. Cost of magazine and journal. Magazine and journal are related to profession. Then next is telephone. Telephone is relating to household or profession. Books purchase. Books purchase is a asset, goes to balance sheet. Books purchase goes to balance sheet. Cash in hand, cash at bank. Cash in hand, cash at bank, asset goes to balance sheet. Okay. Out of these receipts, assets you take in the balance sheet. Expenses related to profession goes to professional account. Then household related goes to household. Clear? Next, you see the adjustment. In the adjustment, 2/3 of rent, you see this. 2/3 portion of rent and electricity. 2/3 portion. And 1/3 of motor car, telephone are treated as household. Carefully you take and allocate. Rent, 2/3 goes to household. Electricity, 2/3 goes to household. Remaining goes to profession. And motor car and telephone. Motor car expense, telephone, 1/3 is relating to household and 2/3 is relating to profession. Okay. Then regarding salary, 2,000 salary is paid to a person who devoted 50% of his time to household. Okay. 2,000 is the salary paid. Out of 2,000 salary, 50% means 1,000. 1,000. That 1,000 is relating to household. So 1,000 salary you take in the household, remaining goes to profession. And stock of medicine 4,000. Stock of medicine 4,000 you deduct in the medicine expense, cost of medicine. Otherwise you take on the credit side of the income and expenditure. Income and expenditure. Okay. Then you see what they ask to prepare. Prepare capital account. They ask to prepare capital account. So here you remember capital account means it is the household account. Remember this. Capital account is just like household. All the household transactions, personal transaction. In the capital account, you record all the personal transactions. It may be capital or revenue. Capital or revenue. Remember this point very carefully. In the capital account, you record all the household items, personal items in the capital account. And second, they have to prepare income and expenditure account. So here is the change. Income and expenditure account is connected with the profession. Remember this. In the previous problems, income and expenditure is related to household. But here, income and expenditure is the common account related to its profession. And personal items you have to record in the capital. So here you have to prepare capital account to record his household transaction. That household transaction may be capital or revenue. All household transaction you record in the capital, then close the capital. That closing balance of capital you take in the balance sheet. Okay. Now you see the solution. First, we prepare the income and expenditure account. In the income and expenditure account, first you write the visiting fee. It is the income of profession. Next, you write the lecture. Lecture is also related to his profession. And the sale of prescription means medicine. Okay. Certification is also income. Okay, these are the incomes. 4 incomes are related to profession. You write here. Then you take the expense on the debit side. First expense is medicine. In that you deduct 4,000. In that you deduct 4,000. 16,000 is medicine cost. Car expense 6,000. Out of that you take 2/3 related to profession. Miscellaneous expense you take totally related to profession. Salary, total 6,000 salary is there. Out of total salary, 2,000 is paid to one person. Out of 2,000, 50%. Remember very carefully. Salary 6,000. Out of 6,000, 2,000 is paid to a person. That person devote 50% of time to household. So 50% of 2,000 is 1,000. 1,000 is not related to profession. So 6,000 minus 1,000, 5,000 related to profession. Then rent. Rent you take 1/3 of the rent is relating to profession. Next, interest on loan. Interest on loan you take, interest on loan is 2,400. It is equal to the 1 year interest. It is equal to 1 year interest. If this interest is more than 1 year interest, you have to deduct excess as advance. If this interest is less than 1 year interest, you have to add outstanding. Remember this point. And electricity charges, you have to take 1/3. Then journals and magazines, the professional expense. Okay, telephone expense you take 2/3, 1,600. Okay, these are the expenses related with profession. Okay, these are the expenses related with profession. So total is 75,000. You take the total 75,000 and close the account. Net profit is 36,000. Net profit is 36,000. This net profit goes to a household account. Remember, here household account is capital account. So conversion is there. Income and expenditure is related to profession. Okay. As the instruction given in the problem, you have to solve. Capital account is relating to household and all the revenue and capital nature items you record in the capital account. Okay, this is the 36,000 is the profit goes to capital account. You have to add this in the capital. Okay, this is the capital account. In this capital account, you have to write all the incomes of the partner on the credit side, all the expenses on the debit side. So first you start with the opening capital. By balance brought down, capital is 40,000. Okay, 40,000 capital. Then you take these personal incomes on the credit side. Pension from government is 8,000. Next, income from saving. Income from saving is 10,000. Then lottery income is 20,000. Okay. These are his personal incomes. Then profit from the profession is 36,000. So these are the incomes of the owner. So these items you take on the capital account. It is just like income and expenditure you studied previously. Okay. You record them. You record these items. These are incomes of the doctor, personal nature. Debit side, you take his payments. First payment is rent. Out of rent, you take 2/3. 1/3 is taken in the above. Then you take next item, car expense. 1/3 you take here. 2/3 is taken in the above account. Next is electricity charges. 2/3 you take 2,000. Telephone, you take 1/3. Salary, 1,000. Out of 2,000 salary, you remember this point, don't confuse it. Out of 2,000, half is relating to household. So whatever you deducted in the above account, you take here. Out of 2,000, 1,000 is relating to household salary. Household expense, 10,000. Household furniture is there. The furniture is drawing. Remember that. You take that drawing. Then festival expense, 2,000. Then you close the account. I think the close of the account, the total is 48, 40, 58, 68, 78, 78 plus 4, 84 plus 3, 1,14,000. You take the total, balance carried on 82,800, this goes to balance sheet. Okay, now you prepare the balance sheet. In the balance sheet, liability side, you take capital. You don't make adjustment in this capital because capital account is already prepared. According to this capital account, you take the closing balance of capital account. Closing balance of capital account is 82,200. You take that closing balance and thereafter you take the liability. There is only one liability, that is loan from friend, 20,000. Okay. Thereafter you take the asset side. First is surgical equipment. It is in the payment side of your receipt and payment. Next is motor car. Third is medical books. Medical books is asset 3,000. And thereafter stock of medicine you take 4,000. Then cash in hand is 17,000. Cash at bank is 33,200. Total of the balance sheet is 1,02,200. Okay. Simple one, balance sheet. You prepare the balance sheet and take the total. This is the problem based on doctor. So you remember, in case of doctor, you have to prepare final accounts according to given instruction. If they ask to prepare profit and loss account for profession, you prepare profit and loss account for profession. And income and expenditure account for household, income and expenditure account for household. And in the second case, they ask to prepare capital account for household transactions, capital account and income and expenditure account. If they ask to prepare capital account and income and expenditure account, then in the income and expenditure account, you take the professional items. And in the capital account, you take his personal, household related, revenue and capital both. Revenue items and capital items, both you take. And close the capital account, whatever balance comes, that is the closing balance, comes to balance sheet. You remember this point regarding the doctor. Okay. We'll see the remaining in the next class.